We discussed KQ results, we discussed NSE results, we discussed the general policy environment, macroeconomic, how it is impacting the Nairobi Securities Exchange. And we discussed the drought of listings. We haven't seen a serious listing in quite a while. And now let's talk about a particular segment of the stock market, which has been a key driver of the bear run that we are seeing. And by bear run, we mean falling share prices. The cement segment, if you look at Athi River Mining is under administration. We know, and the trading was suspended last year. We know that East African Portland Cement has had its issues. There's actually a massive restructuring ongoing. And if you look at the Bamburi Cement half-year results, total earnings were falling from 1.2 billion shillings to just about 300 million shillings. I mean, that's a serious plunge in earnings. What do you think is happening in the cement sector of this country? If I could start with you, Churchill.
Julians, we have the Big Four agenda, which is quite big on affordable housing. So broadly, you'd expect that cement will be one of the main beneficiaries from this Big Four agenda, affordable housing, despite the fact that we're going into some alternative channels. We also have the big infrastructure projects that are ongoing. So you'd expect that cement could be one of the main beneficiaries into in all these macro developments, but that has not been the case. My view is that in as much as these macro policies to support this cement factory, some cement sector.
If I could just interrupt Churchill on that note, we are told that the Communications Authority is in Mombasa and the acting Director General, Mary Wanjao, is speaking. Let's just listen in and hear.
Changing capacity building requirements for the region. Congratulations, sir. Ladies and gentlemen, the African region typically has very high expectations for its institutions in terms of developing homegrown solutions to these myriad challenges. However, we do not have a good track record in respect to meeting our subscription obligations to our very own institutions. As a result, most intergovernmental bodies in the African region, including AFRALTI, are operating below capacity due to budgetary constraints. In order to derive value from our organizations, this practice needs to change. I therefore urge council members assembled here to take this message home and the entire membership so that we support our institutions to deliver on the promise. As I conclude, ladies and gentlemen, I urge you all to take advantage of this forum and have insightful deliberations and exchange of useful experiences. With those few remarks, I wish to take this opportunity to welcome our chief guest today, the chairman of the Communications Authority Board of Directors, Mr. Ngene Gituko, to deliver the keynote address. Thank you very much.
Thank you, Mercy. Chairman of the AFRALTI Governing Council, here represented by Mr. John Daffa, Mercy Wajao, the Acting Director General of the Communications Authority of Kenya, Mr. William Baraza, the Director of AFRALTI, Dr. Simba, Executive Secretary of Ibaka, Mr. J. Barrow, Finance Manager, African Telecoms Union. I want to start by giving apologies on behalf of Mr. Jerome Cheng, who is the PS for ICT. He's not able to be with us this morning. As some of you probably know, we are already, especially the Kenyans, obviously, they know that we are doing our census exercise this whole week. And being ICT, PS is very, very involved in the exercise. So he apologized for not being here. I would like now to pass his message as it is, so that he doesn't later on say that he didn't say that. It is my great pleasure to join you this morning to officiate at the opening of the 58th session of African Advanced Level Telecoms Institute, AFRALTI Governing Council meeting at this coastal city of Mombasa. Allow me to join other area speakers in welcoming all foreign delegates to Kenya. It is our hope that this ambience of the freshness from the ocean will provide a conducive environment for your meeting and equally avail you an opportunity to appreciate the diversity of Kenya. Over the years, we have seen Aphrodite grow, and it is gratifying to note that the members still maintain a strong focus to ensure that Aphrodite delivers on its mandate of building the industry capacity in our region. This meeting in particular comes at a time when demand for ICT skills is high. It therefore means that Aphrodite has its work cut out as governments, regulators, industry, and other partners seek to build and transfer required skill sets to foster growth in the fast-changing technological landscape. This is not unique to our region, but it's a global phenomenon. It is evident today that despite the good progress since the turn of the century, capacity deficits remain a major challenge facing African countries in their quest for sustainable development. It behoves us to overcome the skills deficits so that we can progress our ICT strategies in order to achieve development goals. ICT, as we all know it today, is a pillar to virtually all sectors of our economies. This explains why the digital economy is emerging as a critical goal in our countries. The centrality of ICTs to operations as nations cannot be gainsaid. It is the reason why training institutions like Aphrodite come into sharp focus. It is no secret today that the digital world has immense possibilities for our economies.
And that's the communication conference in Mombasa. We'll bring you more details on that later on in the bulletins. But for now, let's get back to Nairobi and G Gardens in particular, where my colleague Nayoma is on the ground getting a sense of what citizens think about the ongoing census. Nayoma.
Thank you, Julians. We are here at G Gardens, and census began 5 days ago, and we are here to talk to Kenyans and find out whether they've been counted. And let's start with him. Hi.
Hi.
What's your name?
My name is Matthias Moyamwande.
Okay. Have you been counted?
I've been counted, yes.
Okay. When?
I was counted on Sunday, that is 25th of this month.
Okay.
Yes.
Those questions that you were asked, were you comfortable with them?
Very much comfortable. I answered all of them. And everything was okay. Yeah.
So you have no complaints about it?
No complaints at all. Although the complaints I have is that the questions are taking a bit too long. 30 minutes, about 30 minutes, which is too long actually for the whole population in Kenya to be counted.
Okay.
Yes.
Okay.
Yeah.
Thank you. Can I talk to you, please? Hi. What's your name?
My name is Francis.
Okay.
Yes.
Have you been counted?
Not yet.
Unangoja kuhesabiwa lini?
I don't know. I'm just waiting.
Okay.
Yes.
What do you think about the whole process now that it is the 5th day and you have not yet been counted? What do you think?
No, it's a bit slow
Okay.
because like we are staying in a unit of 34 people. Nobody has been counted.
Okay.
Yeah.
And now that you're here, how do you expect to be counted? Do you expect them to find you here, or?
No, basically there's people in the house, so they can just go to my house and check.
Yes.
I'm saying there are people in the house, so they can just go in the house and start counting those people instead of just relying on me alone.
Okay.
Yes.
Okay. What about you? Hi.
Hi,
Your name is?
my name is Okonda. Yeah, I've been counted
When?
on Sunday.
What are your comments about the entire process?
The officers were friendly. Actually, they were friendly, and from the experience that I saw, at least they are capable to do their job.
Okay.
Yes.
What do you think about the questions?
They were simple and clear to answer. Even a small kid of 10 years can answer.
Okay.
Yeah.
Well, so you're okay with the entire process?
I'm okay with the entire process, only that I say thank you to the Interior Security, Mr. Matiang'i. He said no bus, of which right now we are now sleeping nicely without noise. That's the best thing that he did. Okay. No noise, things are quiet from 8 till down.
Okay.
Yeah.
Thank you. Those are a few comments from Kenyans. Some have been counted and others have not been counted. They say they're waiting for the enumerators to get to them, and they hope that they will get to them. Back to you in studio, Julians.
Many thanks, Naoma, for that update on the census, and we'll be, of course, following up to the conclusion of the process, which is set for the end of this month. But back to studio, where we're discussing matters of the Nairobi Securities Exchange. And before we went on the break, Churchill, you were giving us an insight into what's happening in the cement sector and why stocks and companies in that particular segment are not doing particularly well. Please pick up.
Okay. From a revenue point of view, these companies, the local companies, are facing competition from some of the companies, China, Uganda, which are, their products are quite cheap as compared to the products from the local companies. So you find that on a cost basis, you find that they are losing out from the foreign competitors. So that's another issue that is bedeviling the local cement companies. Also, from a cost perspective, you find that the cost of electricity is quite elevated. These companies are quite resource intensive. They have to run 24/7 at least to be able to produce their end products. But now the cost of electricity is quite elevated. They have not managed to find some efficiency in terms of containing the skyrocketing electricity costs. So these are some of the factors that have had an impact in the bottom line of these cement companies. Yeah, and of course there are some factors which are quite company specific. As you mentioned earlier, ARM has been on liquidation, administration rather, which is more of corporate governance issues. EAPC, which we saw last month at some point announcing restructuring in the company so as to be able to contain the costs. So these are some of the issues that are in the broader cement sector.
Okay. Rufus, on the same?
I think of 2 points. One of them is an overcapacity issue. And as he alluded, those are some of the industry challenges. So you see, as a country, we have a capacity of about maybe 6 million metric tons, maybe slightly less, but then you see, production that is way above those levels. So that's also depressing prices, cement prices, and, it's making things a bit murkier. The other issue is also, it's tied to the real estate sector itself. I think the latest banking supervision report says, real estate sector has the most non-performing loans, and a third of them are tied to that. And so that also, feeds back into their performance. And then, as he alluded, the issue of competition, there are more players, which is also affecting the prices. So all those factors combined, now is feeding into now their performance. So somebody had a term for them. That particular sector is now called a voodoo sector because it's nothing but just companies, but nothing inside.
Yes.
Yeah.
That's not very kind of you, Rufus, but I'm glad you've mentioned the real estate sector because one of the companies which is listed, and we covered their results not too far back, is Home Africa. And if you look at the numbers, they're not, again, quite something to write home about. And the challenges facing the real estate sector are quite significant. We've spoken about an issue of glut in the market, especially in the commercial side. Where do you feel this particular sector is heading? Rufus?
Well, specifically for Home Africa, I think when you look at the offering itself, is a bit too end for the typical Kenyan. So, and in that particular sector, there's been, obvious reasons. There's been an oversupply. Yeah. And then from a yield perspective, even for guys who want to buy some of these apartments, it's not looking very well. You'd rather even put your money in the treasury and you still have a very high good yield. So those are issues. But I think the company itself has had, issues with over-leveraging. And then specifically, we've also had challenges with access to some of their locations. So they have some of these big projects that have challenges, some easy challenges like location and stuff. So that in itself has meant that take up some of the offerings is taking quite a longer time than expected. Yeah. So and that is has kind of now hit them back with the bad performance and things. So as it stands right now, there's new management, but there's no clear strategy going forward. So up until then, we'll just see that kind of a sluggish performance. The stock doesn't really perform very well. It just bounces up and down, but it never really moves. I think maybe from an investor point of view, we'd want to see some clear strategy on how to unlock value some of the current projects they have, and a clear mission forward, sort of a restructuring and a restrategizing kind of thing.
Okay. And Churchill, just to switch gears, because we often talk about the bear run and we paint a picture that the entire market is doing like really badly. But let's be honest, there have been some good stories thus far. If you look at the banks, for example, if you look at Safaricom, for example, if you look at the East African Breweries Limited, and I'd just like us to discuss, for example, like banks. There has been discussion around, especially the finance bill is proposing a repeal of the rate cap. Do you feel investors are being overly optimistic about the potential of a repeal in 2019 around the rate cap? And what's your general sense around banking stocks?
I doubt that investors have already priced in a repeal of the banking interest rate cap.
Yeah.
That as it is. Best case, I see that there could be a modification of the interest rate cap. Remember, there's a parallel piece of legislation that is countering the repeal of the
High Court ruling.
Yeah, the High Court ruling, the banking amendment bill, which is trying to make correct what was deemed unconstitutional and which was voided by the High Court ruling. So I find that that has a better chance of going through, but I'm saying that there could be an outright repeal. The outright repeal of the interest rate cap is off the table, in my view, so to speak. But going forward, I think that when we started this interest rate cap back in September 2016, there was a bit of some negative sentiments toward the banking sector's stocks in general, but by and large, we've seen that the banking stocks, the banks that are listed have more or less adopted to the interest rate cap environment. They have changed their models. You find that even the split between what comes from the income that comes from interest, the loans, vis-a-vis the ones which are not from the loans, is more or less balanced as where we were before. And also in terms of their models, they have tried to, at least to be innovative. Most of the transactions are off the branch. They have gone into the digital space, alternative channels, so to speak. So I find that the banking sector is adaptive to the current environment, and that's also what the investors are looking at. Of course, they are cherry picking the best stocks in the banking space, and the tier one banks, which by and large are the ones which have been listed in the stock markets, are the ones which have gained attraction. Of course, the top three banks in the tier one space, those are the ones which are really looked at by investors, and that's the one which are driving activity within the banking space. Of course, NBK is being processed more or less to be delisted from the stock exchange once this the merger with KCB comes to fruition. We'll look at it once it's closing Friday, and then we'll see the results in 2 weeks' time. So we'll more or less see one stock off the banking stock space, and also the merger between NIC and CBA will now bring NIC Bank from a tier 2 player into tier 1 bracket. So, I mean, it's quite exciting times for the banking sector, but by and large, people will now be cherry picking which stocks are quite best and which are adopted quite well in this environment.
There's been quite a debate around the waiver of the stamp duty, which had been provided by the National Treasury around the NIC-CBA deal. Do you feel this has reflected in any way on the NIC price this week?
I doubt it has had an impact on the NIC counter movement from where I sit.
Okay.
Yeah, I doubt it hasn't had any impact. From how I see it, I normally look at foreign investors are the ones who drive activity in the market, but they have really stuck to the big banks that are in the banking space. You find that this is guided by, they look at what is called a benchmark, the MSCI frontier market benchmark. So that benchmark, they just has 2 banks into that benchmark, and that's KCB and Equity. Yeah. So focus on those two counters rather than NSE. So I haven't seen much of an impact from that news that came out last week.
Okay.
Yeah.
And getting to you, Rufus, I've been looking at bank results being put out. I think it's the half year. And this is the first time in a bit of a while where I'm seeing the loans and advances are extended to the public growing by what I would call significant margins. And the reason is very obvious, because if you look at, they've been investing in government paper, which is bonds and T-bills, but the yield curve has been declining, which means they're getting less returns on that side. Right. Where do you think this leaves banks? Because they've been shying away from lending to the private sector. Now it looks like they're being sent back to the drawing board.
Well, I think when you look at to be honest, and it is something that is kind of confusing to me, because the question you asked earlier about what's the macro environment, and we say it's a bit not so looking good. But from where I sit, I think it's a bit confusing, because there are markers that say it's a good market, at the same time not so good. And to answer your question, say for example, let me refer to the Stanbic PMI ranking that comes out every month, and that says we've had expansion in private, businesses. And so long as it's above 50, it means, there's good business, companies are getting orders, people are getting hired. I think now, I'm just thinking, perhaps maybe that's feeding into now where we're seeing, advances going into that. If banks are seeing there's good activity from the corporate side, and businesses are expanding, and there's, a rise in, orders, then perhaps we're seeing more lending, because I think the growth has actually gone up from 2, roughly inching towards upwards of 5%.
Yes, correct.
So I think perhaps maybe that answers your questions. But again, we may need to look deeper whether that's sustainable, or is it now a total refocus, or are we going to see now a relapse again towards being conservative, or going back to treasuries, as you'd say. So perhaps that's a wait and see for us. So I don't know what will happen, but of course it's a good sign. It's a good sign for the market itself. The point I mentioned from the onset is the market itself has been very flat, and that in itself says there's that struggle to find a resolution. Where do we go? Okay, and you're seeing it. That in itself is a reflection of what's happening outside. So on one hand, you're seeing banks increasing their lending, and then you have this report from CFC Stanbic with the PMI rating. But then again, you're seeing, some of the big chips doing very poorly. Yeah. Okay, and then you wonder how. You're seeing, mass layoffs. So you almost are seeing, two different sides from a macro point of view. So, and that's reflecting in the market, seeing that kind of a flat market. People don't know which one do we give more weight, and and does give us some direction. Just to the last point, you also talked about foreigners, for instance. So, I mean, when you mention a point like the global tensions, effectively they show weaken some of the emerging frontier market currencies, and that's already happening. We've lost maybe about 0.5, maybe 1% as a country. The Kenyan shilling losing to the dollar, but we're seeing foreigners coming back. Yeah. So that in itself is also confusing. I mean, I think the Q2 report from CMA says they have actually increased their shareholding. Yes. So again, just speaking from a market point of view, all these different data points are very confusing. Yeah. But again, I've answered your question a very long way. Yeah.
But don't you feel the re-entry, if I could call it that way, of foreign investors is quite understandable? I mean, if you look at the options they have in terms of what we call emerging and frontier markets, right. South Africa is quite unpredictable. If you look at Turkey's another story, if you've seen what's happening with their currency. So really, it looks more like a safe bet as far as the options on the table are concerned. Would you buy that view, Churchill?
By and large, you could look at some of the fundamentals in the economy. It's debatable, the growth rate of the country, but those are some of the factors that even guide them in terms of their entry points. And of course, in terms of the other things they look at, because they look at the returns in this particular market, and also they look at the foreign exchange, the developments of the foreign exchange. So you find that when their currency, which is now the dollar, is strengthening, it's much cheaper even to come in to even pick up the stocks in these markets, any market that they're looking at. Right now, from where we are sitting, you find that by and large, the outlook for the dollar is quite elevated because it's deemed to be quite a safe currency in all this turmoil that is currently happening. So you find that now they are able to have that appetite to come into the local market to be able to spur even the activity. Having said that, what we are looking at in terms of the macro environment, we had the rate cut in July in the US. What was our base? The base scenario was that now, because now they have lowered the base rate in the US, it will now increase the appetite of the foreigners to go and look for returns elsewhere. So we are quite bullish on that, but and of course right now, because of the escalating trade wars, we're likely to see more rate cuts in the cards by the end of this year too, which is what has been seen by the market. There'll be further 2 more rate cuts, and it will be able to support further entry points by the foreigners into the local market. So, I mean, most of the liquid stocks are quite poised to be snapped up by the foreigners, and it will uplift even the activity.
And aside from the banks, one of the other stock which has been doing relatively well is Safaricom, and we do appreciate, I mean, at the administrative level, there's a bit of transition ongoing. We have Michael Joseph in interim capacity. If you look at the last numbers they tabled in May this year, there was the issue around mobile data revenues were a bit subdued, but they said they decided to take a strategic decision to subdue their price so that they ensure at least the consumers who are facing a tough economic environment are still able to afford. What are some of your thoughts on the way forward, let's say in the near term for Safaricom, Rufus?
I think, though, what we'd like to see is to see a very clear position in terms of the expansion outside this country. I think they've really maximized on the key levels they have inside here. I think we don't see what is the play going to look like in Ethiopia, for instance, in some of these regional countries and some of the product offerings they're trying to introduce. I think TZ, Uganda, if I'm not wrong. So those are some of the clarity issues that we'll need to see. I think it's still a very solid business, you know, both from a corporate governance, / people, and also the financials. And they have a very clear process how they're moving forward. Looking at I think that also has fed into its stock performance. It's been one of the, it's really held very well, even amidst all this fear mongering going on. So it's one of the stocks that you'd want to watch going forward past this shaky times.
Okay, Churchill, on the same. I think some of the people who are should I say jittery or cautious about Safaricom would say that the company is spreading itself a bit too thin. If you look at, for example, their venture into Masoko, which by their own admission has not fared out very well, you get the sense that perhaps getting too many products out there ends up leaving you without a very good firm grasp of each one of them. What would you say?
Yes, that venture by Safaricom into the e-commerce space hasn't quite panned out well as was expected. And this is not the first of the products that they've tried to come up with and hasn't panned out well. So I think Safaricom, one of the best things that I like about the company is it has a way of reinventing itself. So I think they'll by and large start focusing on their core businesses and mostly infrays into the home data, which has quite turned out well. So I think the strategy is for them to focus on their core areas, and as they try to offload some of these products that hasn't panned out well, that's the baseline for me in how they will try to continue revamping its business.
I see. Mm-hmm. And on that point on Safaricom, we move to County Hall here in Nairobi, where Kennedy Mureithi is on standby, and I hear matters of the Division of Revenue Bill are being discussed. Kennedy, if you can hear me, what is the latest from that side?
Well, thank you very much, Julian, and quite an interesting debate, interview you're having there with those two gentlemen. But here in Parliament, we do expect that any time from now, probably in the next 25 minutes, members of the mediation committee that have been sitting for quite some time will be at this area, that is the county hall. And we do expect that members of the National Assembly and members of the Senate who have been nominated to sit in the mediation committee are going to be trying to that are in the Senate were seated on the front row, and also on this other side, members of the National Assembly were seated. But there is nothing that could be transacted on that particular day, as it was a shouting match. Duale, who was seated on that side, that is the leader of majority, will be shouting to Senator Mutula Kilonzo, who was seated on this other side, and nothing will be able to move. And they were also able to have an election whereby they chose Kimani Ichung'wah, that is the member of parliament for Kikuyu, and also the Budget and Appropriations Committee chairperson in the National Assembly as the chairperson, and he will be deputized by Mohamed Mahmoud, who is also the senator for Mandera and the chairperson of the Finance Committee of the Senate. And on that particular day, Kimani Ichung'wah was not there. So this committee was, on that particular day, was chaired by Mohamed Mahmoud, but they could not be able to make any headway. So what do we expect today, Julians and Kenyans who are watching us? We do expect that probably the members of this committee, who are totaling 18 in number, will also be inviting views from different stakeholders, that is the Commission for Revenue Allocation. Also, we do expect the governors will be here because they do believe that this matter has dragged on for quite some time. And if they do not get a solution this fast, then counties are going to be experiencing so much more cash crunch. Counties at this particular time can only access their own source revenue, and that is the money that has to first of all come to the consolidated fund, then they are able to access. But this money is not enough to run counties. So they are only left with that duty of paying salaries and just doing some small things in the offices. Whether they will be able to find a solution today is something that we can only be wait. Probably in the next 20 minutes when the governors, members of this committee, CRA, the Treasury, and all those other stakeholders will be meeting in this particular room to try and unlock this cash crunch in counties. Back to you, Julius, in studio.
Many thanks, Kennedy Murithi, for that quite detailed breakdown on the issues around the division of revenue bill, which still is stalemated between the National Assembly and the Senate. But now let's get to Mombasa, where the Communications Authority conference is continuing. I'm told it has been wrapped up, rather, and therefore we shall just be getting back to our studio conversation, where we are focusing on the Nairobi Securities Exchange. The bear run, we've highlighted a number of things, and before the break we were discussing matters around the stocks which are looking good, banks, Safaricom, EABL. But there has been a particularly interesting development around one particular counter, and that is Centum. Now, Centum has had a number of exits, implying they are getting off some of the investment they had made. They exited Almasi Beverages, Nairobi Bottlers. We've seen another one around the King Beverage lately, late last week. It looks like their strategic direction is to exit the beverage space in the country and perhaps consolidate in the real estate. I'm not quite sure what to make of that strategy and what that means for shareholders. Rufus, if I could start with you.
Well, I share the same sentiment. It's been a very interesting stock to watch, especially, I mean, for several years right now. So just to comment on one side of that question is, yes, you've seen a lot of exits, and perhaps maybe that's informed by, trying to unlock value, trying to, what is this word? Trying to maximize on the return. So in that case, then it's well advised. And across the several names that you've mentioned. And then, of course, there's the biggest play, which is in real estate, that is still ongoing, and a bit of exits here and there. But the other side of the coin is, I mean, this is a business that every 5 years keeps on changing its strategic plan. Okay, so that in itself is a big problem, because from one side you see a business selling itself as a long-term play, but in actuality, it's more like a day trader. Okay, so that change of focus every 5 years all go well. Okay, I think well, there are reasons that have been given, and that they're trying to lessen the burden on their asset book. I mean, assets, for example, and to create new vehicles that will tap into, you know, like say for example, in more PE fashion, for instance. So creating funds that leverage not only on their own assets but also other asset, you know, players coming in and combining. So that in itself is well informed. I guess it looks like it's the new thing to do. But again, coming to the core strategy that we've all known Centum to be in, an infrastructure play, well, more like a diversified business, okay, yes, into at least 5 sectors. But we're seeing a slimming down of this, and every 5 years there's a new direction. That to me is a big concern. When you look at its performance itself, is more like a zigzag. There's analysis people saying, you know, it's not a true reflection of its true value, but no one really know how. It's very difficult to put value in a stock that is kind of, you know, seesawing in a way in terms of its direction. Okay. So no one really knows the true value of this business. Mm-hmm. Yeah. And
Churchill, to counter what Rufus is saying, some would argue that perhaps this is a level of dynamism which should be reflected by a company on a long-term view to be able to adjust to evolving trends within the wider ecosystem, and by that I mean the macro environment. What do you think about Centum's latest moves? Because it looks to me like they're exiting, as you said, we have always known it to be a very diversified company. Now it looks like they're concentrating more on the real estate side, which in this economy is not doing too well. What do you make of it?
It's quite baffling, because, I mean, the ideal strategy is to drop the losers and stick with the winners. But by and large, if you look at the whole macroeconomic environment, you find that real estate is quite in trying times in the economy. So for it to still maintain that it's overweight, increasing its allocation or maintaining its allocation to real estate despite the whole macroeconomic development is quite baffling to me. So it's something that speaks of informational advantage. If I may give them credit, we may not know that they're seeing something that the whole market is not seeing, or they will try to be able to have some developments. For instance, the land in Vipingo, which is yet to be fully developed. They could be looking at putting much capital into it or developing it further. So it speaks of informational advantage at this point, whereby they are really quite keen on future developments, but at the moment it's still not, it's baffling to me.
Okay. Yeah. And one of the key issues which has been a matter of concern for many who look at the stock market in this country has been the suspended entities. We've had Decons East Africa, we've had Atlas, and when you look at the trend that we have seen lately, do you feel this reflects, back to the conversation we were discussing about quantity over quality, and perhaps we were rushing to list entities which don't meet perhaps the thresholds that would be required, and this definitely has a reputational risk on the Rufus?
Yeah, and it's really taken off. Taken some points off the, you know, as you'll say, you know, reputational risk, and it's still an open debate how to best deal with some of the, you know, bad behavior with some of the businesses there, or, you know, businesses run into problems, for instance. Okay, so is suspending the best option, because that option always has to have a multi, you know, sectoral approach, because there's so many players involved. There are the investors on one side, there's the business itself, then there's the reputation itself of the whole market. I think there've been, in my view, looking at some of those directives. I mean, not directives, but some of those the suspensions that have been done in the past. It looks as if it's knee-jerk reactions. Okay, because people that tend to get hurt most are the retail investors. And let's give an example of, say, Uchumi, for instance. And when it was first put on suspension, I think sometime in 2015, I think, and 2016, and for several years, about 2 or 3 years, it's just sat there, no resolution, nothing. Yeah. Okay. And when the ban was lifted, there was a big drop in value because everyone was running towards the exit. Yeah. So the question is, yes, the company sorted itself out, but at what expense? Yeah. Okay. So do we have other initiatives that we can bring to the table to sort out the system itself? And one of the solutions that I've seen flying around or being proposed, not adopted yet, is do we have a sick board, for example? Okay. So companies facing challenges here dropped into that, let me call it an ICU, for instance. They sort out the issues, but still trading. Yeah. Okay, still open. This is more akin to what you have as penny stocks in other jurisdictions, right? So let it sort itself out, but people having the opportunity to sell or not to sell. Okay, so you choose to stick it out, or you're saying, I'm done, I'm cutting my losses, I'm out. But when you close that door, it makes things very difficult because people invest in this market for various reasons. Someone might be exposed to only one stock, and when it is suspended, they don't have any access to realize that, whatever value they're going to get. So I think there's a point to be made for having, let's keep suspension. Yes, it serves its purpose for some specific problems, but let's broaden it. Let's have a wide-ranging solutions that can be customized for these problems that we have.
Churchill, Rufus seems to be of the view that we don't have what I could call sufficient palliative care for companies which are in this particular state. I don't know what you would make of it because we've seen a number of suspensions and definitely they have an impact in terms of the perception of the market.
Well, on a more opposite view, one of the companies that initially had to be suspended and then finally delisted was Kenol Kobil last week. But if you look at it in terms of the stock itself vis-a-vis its competitor, you'd find that that one was a good stock by and large. It was heavily traded by the market. It was quite liquid. So it was a good stock as compared to some of the other stocks in the whole universe of the stocks at the NSE. But the message overall that is coming out even from there, it was that was a quality stock that is off the market. Yeah. So not all the stocks that are under suspension, they are bad stocks as per se, but some of them could be, but now they're just the whole dynamics of somebody coming to take over it, which is a bigger player, and taking it off the market is just showing even concerns that not necessarily that the bad quality stocks are being suspended and finally delisted, but even some of the big quality stocks could end up that way. You've seen a number of delistings more than listings in the last number of years, which is quite a concern by itself in the market. So ideally, the bigger conversation is, we have to look at ways of bringing quality stocks on board. Right now, there's the Ibaka program, where is the incubation of some of the companies. Right now, the last count, it was around 11 companies which is under incubation. I'm not quite sure the whole ball game to it. Is it that finally, after being incubated for a number of years, they'll now be ideal candidates to be listed? Is it the way, or is just a form of mentorship or incubation around it? So, but ideally, Ibaka should be an ideal way of bringing quality to the NSE.
But Churchill, just, to be fair, one of the issues you've mentioned is the Kenol Kobil, and I think that was a nicely packaged, transaction going on, and we have a good appreciation of, never mind the insider trading incident, but clearly it was a good company which was going off the market. But now that you've mentioned the Ibaka program, part of the reason why perhaps there isn't as much confidence around it is because we've seen NSE try such products before. The growth enterprise market segment was designed to play a similar role, that you have an entry point for small and micro medium enterprises, and therefore they will be able to graduate to the listing. But the kind of performance we've seen ever since it was rolled out in 2013, I would say, has not been so encouraging. I don't know what you think, Rufus.
Yeah, well, the whole Ibaka program is, I think is good, if you ask me. But again, to look at it from a cynical way is it's almost like an admission that the gems market is a flop. So I guess it's a reducing, saying fine, before rushing these SMEs to direct listing, to listing directly, for instance, can we groom them and make them more investable, for instance, okay? So I guess maybe that's the main point there. And if that is the case, because, well, it's still unfolding. We've seen a couple of guys, joining the program, so it's too early maybe a bit premature to comment on that. As it unfolds, we'll see how it happens. But just to give a comment for the sake of, I think it's a good program for some of the initiatives that have been tabled. So one of them being a mentorship, okay, and then two, being surrounding these businesses with quality advisory, to kind of now clean up their operation. So that is great. And then three, now just beginning to build the stories behind these businesses and selling them to the market. So in readiness to the point where they're free to join one of the boards. So I think from those initiatives as laid out, I think it augurs well for the market in terms of listing. Okay, so let me just be positive and be hopeful. I think because the only thing that is going to increase the listings, it's going to come from this SME market, because we have lots of them as opposed to the big businesses, as it were. So the focus there is well advised. Let's see whether this approach works. But the gems, no, it's a toast.
Churchill, we have the Ibaka program here, the predecessor was GEMS. What kind of signal are we giving here to the market?
As what Rufus are saying, I think it's Ibaka program, how I see it is like a anti-chamber to the main room, now the main room being either of the main segment or the GEMS segment listing. So I think this is a good initiative of trying to mentor these companies that are under the Ibaka program, such that by the time they eventually being listed, ideally most of them are candidates for GEMS. There'll be quality companies which will be investable by people will now be able to look up to invest into those companies. So I think it's quite bridging measure, at least to ensure that quality companies are brought to the view from a point whereby most of the GEMS companies are in the red. So it's quite a brilliant idea.
I see. And Rufus?
Maybe just to add on to something, I think in this whole conversation is also the most important point also is the issue of cost. And you'll hear a lot, especially when you interact with SMEs, they'll tell you, while listing, it's going to cost me for X amount, I have to pay the 2 or 3%, okay? The cost issues are a real big paining point for SMEs, desiring to list. So I think if that is also, managed well, like the thing that we're mentioning now about, surrounding all these guys with advisors, that's still going to come from the pocket of the SME.
Yeah.
So again, let me be positive and say perhaps it works in the future, or it's going to work. But again, they will need to have a serious focus on the costing itself. If it goes lower and it's easier for SMEs to come in, then the better.
And just to, as we get to the tail end of the conversation, one of the companies which has been admitted to the Ibaka program lately has been Tuskys. What do you feel is the future of the retail market, considering what we have seen around Uchumi, what we've seen around Nakumat, in terms of giving us a potentially listed entity beyond Uchumi? Churchill, if I could start with you.
Well, having said that, looking at some of the issues from the retailers, it all boils down to corporate governance. Looking at even Uchumi and Nakumat, from what we've been seeing, it just comes down to corporate governance. So I think one of the best things that will come out if eventually Tuskys ends up being listed, it will be able to improve its corporate governance, because there's so much scrutiny in a listed company as opposed to a company which is private or a family business company. So I think that will be one of the best, one of the benefits that will come out eventually if Tuskys becomes listed, because that's one of the things that has really bedeviled the retail market segment.
Okay. And Rufus, as you give us your final comments, your thoughts around retail and generally the market going forward.
Well, I'd really welcome to, to see Tuskys and, those kind of names, listing. That would really bring color and flavor to the market. We really don't have that kind of play already listed, so that would be very interesting. So if, Mr. Dan and the whole Tuskys, board are listing, I think this is a very a very nice option to to really take forward. To comment on the market itself, I think just back to the original point, I think these are good times to come in. The prices are are really nice from a valuation point of view. Take advantage of the fear mongering. Some of the businesses that are very solid businesses are trading at very nice multiples. So I'd urge everyone to come into the market at this particular point in time.